The hedge fund industry is continually evolving. Regulations such as the Jobs Act and Dodd Frank have had a significant impact on the sector already. Here to discuss these changes and the new options for investors offered by innovative funds is Eric Bissonnhier, Chief Investment Officer at EIM, which recently won the World Finance Award for Most Innovative Fund of Hedge Funds Europe 2012. Eric, welcome.
Thank you, Lenny.
Tell us about EIM. What are the type of products and services that you offer clients?
EIM is specialized in bespoke multi-manager portfolios for institutions. And the way we approach it is by looking at the institution's requirements in terms of risk and return, obviously, but also diversification, regulatory requirements or other constraints that they may have, and construct a portfolio mainly of hedge funds that would be alternative investments that would be appropriate for them in those contexts. And we've been doing this actually for 20 years now, so we have a very long-standing experience in that field.
How has the hedge fund industry evolved over the past few years?
There's a few aspects that have changed significantly since '08. One of them is the transparency we get from managers generally has improved substantially because that's become a very strong requirement for institutions. And institutions themselves are more and more involved in hedge funds and more directly involved in hedge funds, which has also changed the landscape somewhat in terms of access to managers and the type of information they require. What that also has meant in terms of the structure of the industry is that now we have a bipolar industry where we have a wide range or a number of managers that are of significant size and are getting bigger, and a big tail of funds that are smaller, or just as talented, sometimes even more talented than the big firms, which have been around for a long time, but are not raising assets as quickly because most of the money is going for the big funds. So there's a nice, for us, there's a nice opportunity with smaller managers that are raising less assets but are just as talented. And that's a very big change since '07, '08.
How does EIM stay on top of regulatory changes to ensure clients get the best service possible?
It's a very dense question, or the answer could take a while because there's a lot of moving parts, and we track all these moving parts in the US, in the UK, in Europe, continental, in the Eurozone, and obviously in Switzerland as well. All of the regulations or regulatory landscape is changing, either for political reasons or because the process just takes time. So we're keeping track of very closely of what's happening. We're sharing that with clients and actually discussing with them what it means for them, if it means anything. And we will have to see whether it changes the landscape. I think in Europe, for instance, what is being done, the EIFM, may be a positive thing for the industry because it will regulate an industry that currently is not is seen as being unregulated from European institutions. And if it's done properly, that in other words doesn't affect the ability of hedge funds to do their trades and to perform, then it should be a positive development. But we don't know exactly what just like the other ones, what the regulation will look like. So we'll have to wait a bit longer to find out exactly how it affects institutions, us, and the market.
Echo, which is one of your key products, obviously, has recently won Most Innovative Fund of Hedge Funds Europe. Tell me how Echo is different from the traditional product.
The traditional hedging products are options-based, and these have a few caveats. The most obvious one, where we're talking about inflation, which is an uncertain outcome. We don't know, in the sense that it may happen. It's highly probable it will eventually happen, but the eventually has a completely undefined time frame. And when you buy options, you have to always have this insurance, so you have to buy it for a year, and then you have to renew it for another year, just like your car insurance, and you have to do it all the time. And they're quite expensive, which means that in a low interest rate environment, it's very expensive to insure yourself. And because of that, pension funds are not really keen to do that. The second aspect is that you need a counterparty. And especially in '09, it was a concern to have a bank as a counterparty because we didn't know which one was going to survive. In Echo, what we're focusing on is not insure all the time, but it's to capture the environment. In other words, inflation doesn't happen overnight, especially if we're thinking about a global liquidity glut that comes out in an inflationary form. It is something that's fundamental, that is going to hit every market, is going to hit it substantially. And if you don't catch the first 2 months, that's okay, because it's probably going to last for a few years. And especially the movement in rates will be very significant. There are methodologies that are set up just to capture that big movement, and the rest of the time are just waiting for it to happen. In other words, they're in cash, essentially, rather than always paying premium. And that was the intuition to start with, and that's the genesis and all the idea behind the strategies that we're putting into ECHO. The extension now is obviously we're also focused on deflation, which since then has become a major concern.
Do you think ECHO will be able to stand the test of time in this ever-changing market?
Contrary to tail funds, which are really trying to capture a real fall in markets, almost instantaneous fall, this is an asset allocation product. In other words, it's constructed to make sure it has the ability to capture significant macroeconomic development on the deflation side, with the implication it has on risk assets, and on the inflation side, with the implication it has on especially interest rates and other assets. So it's like a kind of a macro fund focusing on the extremes. And as such, it will have the life of those two cycles. Will we stay in the situation we're in now forever? It's difficult to imagine, but the kind of muddle through or consensual environment that we have now could fall either way. And ECHO has the ability to stay until one of the scenarios happens. And if we shift, for instance, from deflation and then have inflation, then it's going to be appropriate for both environments. So it has staying power in our mind. It's more of a long-term asset allocation proposition than just a tail protection fund.
Eric, thank you very much for your time.
Thank you.